This is how I trade my supply and demand zones. All right. And in this video, I'm going to be showing you how to draw them accurately like a pro, even if you're a complete beginner. I'm going to be giving you the rules and regulation, the things to look out for. And yes, this works on currency. It works on crypto, even if you are trading crypto, SOL, USDT, BTC, and so on. You can see how I have been using them, and this is back testing. And again, yes, it works on derivative indices. I have been back testing it, and it works all the time. You see them. The only problem is you will not see them like back to back. But anytime you see them, applying on the chart, forming on the chart, don't hesitate. Take the trade. It works. All right. So first thing first, rule number one, there are specific things you look out for when drawing your supply or demand zone, or probably order block. They are same thing. Supply and demand is the same thing with order block. There are specific things you look out for. There are specific criteria you look out for. So I'll be giving you guys few tips. I'll be giving you guys like 1 or 2 things to look out for, but there are more than 2. They are up to like 6 criteria, 6 to 7. And it is what I teach my students. So this is part of what I teach my students in the mentorship course in the academy. So if you want to learn from beginner to advanced, then you can choose to join the academy as well. If you're interested, check the pinned comment under the comment section. The first pin message, the first pin comment under the comment section, you see all the information there, how to apply and how to reach out to me. But let's just stick to this particular one. Let me give you guys 2 things to look out for. Rule number 1, I use the law of FTO. And if you are part of the academy, before I type and finish, tell me what is FTO in the comment section. What is FTO? 5 seconds. 5, 4, 3, 2, 1. FTO means first touch only, meaning for you to use an order block, it has to be first touch only. Now, let me give you another criteria. Another criteria for you to know the valid supply zones you use. I'm going to be sketching it out, for you to see. You use the law of extreme. You use the law of extreme. So it has to be first touch only. It has to be extreme. Let me give you one more because I love you, because I know you will subscribe to the channel. It has to have an IDM. But I'm not teaching you how to trade them. I'm only teaching you how to draw them. How to draw them. Sure, you get how to draw your supply and demand zone. But these are the criteria. One of part of the things that will make your order block valid. Sure, you grab part of the things that will make your order block valid. Now let's have a scenario that looks like this. Let's say you are in an uptrend and you are looking for a, let's say you are in an uptrend, you are looking for a buy market. Let's say you are in an uptrend like this. Now, if I ask you where is the break of structure, sure, you will tell me it's here, 100%. That's the break of structure, no hide and seek. Now, you need to know what is origin. Origin is still part of this thing. Origin is the same thing with extreme. Origin is the point that caused that. Because initially, if I ask you where is your order block, you will mark here because this is where you want to take the trade. I think I made a video about it. And again, please, if this is your first time coming across my channel, this is the point I will tell you to smash that subscribe button and also turn on the notification bell so that when next I post video on this channel, YouTube is going to notify you. And we are over 15,000 subscribers on this channel. All right. So I made a video. I want you to go, once you are done watching this video, just go to my channel under the video section, go and watch how to trade supply and demand like a pro. Beginner guide. This is where I teach you how to enter trades with the confirmation you need when having more than 1 order blocks. All right. And again, just watch this one and same time which order block is valid. Those 2 is, especially if you have issues with order block. And again, we do go live on this channel. If you want to stay with us, stay connected with our live stream, we go live stream almost every day. But recently we limited it to once in a week. So if you want to stay connected with me on this channel, ensure to smash that subscribe button and turn on the notification bell. So let's continue. Now, when you have more than 1 order block, you initially, this is your, I know you don't need to tell me, I don't need to ask you, this is your view. You want to take the trade here because why? You are impatient. you are rushing the market, or probably you are trading with FOMO. But one thing I want you to know is this zone you are looking at is not the extreme. It's not the extreme. I'm teaching you how to trade it. After showing you this, I will show you how to draw them. This is how to trade them. This is not the extreme. This is not the origin that caused it. So when we are referring to origin, it is this turning point. And again, if you want to, let me add more tip to this. For you to correctly mark your extreme zones, your supply and demand, you have to get used to swing highs and swing low. Swings are different from higher highs, higher low. Swing is the external move in the market. I'm going to be making a video explaining what swing really means. So if you want to stay tuned, if you want to stay updated, you know you have to subscribe. All right. Now, because one thing you need to understand is that there is high chance, yes, this zone might be respected and market will buy to the upside. But since forex trading is not guaranteed, if you enter this trade, you don't know if truly market will be buying or not. That is when we now use the extreme, because there is still high chance market will come. That is why you normally see things like JB market hit my stop loss before going in my direction. It means it sweep you out before tapping the right order block and start going up. Because when you have, this is the question I get most of the time, you have more than one order block. I used to get this question, JB, which order block is valid? Which order block is the best? Which order block will get the confirmation? That is why I told you, go up after watching this video, go and watch the videos, the first two videos on my channel. This one, the first two one. It's going to, I think one of them teach you, I think it's this one that teach you the confirmation you need to use when you have more than one order block. So I'm not going to be going into detail explaining the confirmation, because we are not here to talk of confirmation. I'm here to show you how to trade and how to draw order block or supply and demand zone, so that boom, when next you are in the market, you are a genius. Market is not afraid of you. So first thing first, rule number one, it has to be FTO, first touch only. Rule number two, it has to be extreme. And disclaimer, if you choose to follow this rule, let me predict what will happen to you. Number one, you will stop trading every day. Number two, you will miss out on quality setup. Like A+ setup, you will miss it because you are trading extreme. So if you are comfortable with this, then go with it. If you are impatient, if you are rushing, we have problem with you. So how do you trade it? Initially, we delete this zone. Even if the zone is valid, even if it is, especially when it is closer like this, then what is now this place? Automatically an ID. There is a difference between IDM and inducement, IDM and liquidity. So now this is a first touch only. It is the extreme and it has an IDM. This is how I trade my order block, or probably demand and supply. So I'm expecting this, something like this. I'm going to be showing, I think I have setups like so on, let me show you. But most of the time, market will not respect. This is it. You can see same thing that I'm explaining here. You can see same thing. Is there anything different? We have inducement. Inducement is what I use to mark. If you see me doing X like this, that's an inducement. Is there anything different from this? We have the same thing. Now I'm expecting the market to come and touch here and buy up. Easy peasy. So now, before you tell me, JB, because now in a back testing, I make it day easier. This is live market. You can go after uploading this video, go and check as of the time I'm making this video. This is on the 15th. Yeah, let me check. Let me even know. So as of the time, this is Monday, 15th September 2025, and go and check the current markets. I have one on NZD/USD. I have one on USD CHF, which was disrespected. I deleted it. I have one on USD CAD. I think that one, same thing. Okay, this one is almost respected. You can see the same thing, first touch only. I have one on NZD/USD. Boom. This one, same thing. You can see, still waiting for the market. Same thing I'm just explaining to you. So if you pay close attention, if you listen to me, you back test. I want you to go and back. Don't just assume. Go and back test. If you back test, you will see result. So the next thing we are anticipating on is for the market to tap, dish it out. So go and backtest it and comment your experience sincerely if it works for you or not. Now, that's exactly how I trade them. This is how to trade. This is how I trade. The same thing applies to the sell market. How to trade is called order block. Now, order block is the same thing as demand and supply. Now, let me show you how to draw them. How to draw. This is how to draw order blocks, which is the same thing as demand and supply. I have 3 rules of drawing supply and demand, or I have 3 rules of drawing order blocks. Now, the first rule is the week to week. Let me show you something. This is the step number 1. I want to increase. Let me make it as if it is real candlestick. And my blue is for the buy and the yellow is for the red. Your own might be different, but the same explanation applies. Boom. Let's say we have something like this. Let me bring this one to the back. Yeah, let's say we have something like this. Now, the first rule, and this particular concept, I think it's inside the trading guide, the demand and supply version 2. Let me see. Okay, I think I will have one open here. This is the demand and supply version 2, the same book that I am using to trade. For those of you that have this book, you already know what we are saying. But let me just show you something very quickly. This same concept, for you to know that I'm giving you premium content and not just the carry talk. So let me see. This is it. So the first rule is simply marking the high and low of the candle wick that create the order block. It means marking the high and low. That is to say, let's say I want to draw my order block. How do you draw? You draw from the wick of the candle high. This is the first step. You draw from the wick of the candle high to the wick of the candle low, irrespective of how the wick is small or long. Let's say, for example, you have a long wick to the downside. You will draw it, no matter how small it is and no matter how long it is. If it is small like this, draw it. It's basically from wick to wick. So that is to say, if you want to draw your wick now, you have to, let me reduce this capacity. That is to say, if you want to draw your order block, the first way is to mark from the wick to wick. As you mark the wick to wick, you now extend it. If you are buying, it means you have to wait for market to test it and go up. If you are selling, it means you have to wait for the market to retest it and sell down. So basically, this is the first step, wick to wick. All right, this is the first step using, let me label it. This is the number 1. This is the first step. Now, the second step of how I draw my supply and demand. Let me use this same candlestick. Let me just duplicate it and extend it. I'll still use the same scenario. Now, the second scenario states that, let me read from the book so you know that, yeah, I'm speaking from my experience and directly from the book. The second one is body to the wick in a buy market. This is a buy market, body to the wick in a buy market. Start by marking the closing price of the bullish candle's body. If you're in an uptrend, you know the sell candle is what you're marking, not the wick. So this time around, what does this mean is, if you want to mark, irrespective of how let's just say the candlestick is like this, what I will do is, if I'm in a buy trend, I will mark the body closing up to the wick. The body closing, this is the second, this is the second one. The body closing up to the wick. That is to say, if I want to draw my order block, I will not draw from the wick now. I will not draw from the wick to the body, to the wick to the wick, to the low of the wick to the high of the wick. What I will do is I will mark the body, I will extend it to the upside, then I will just draw it. This is the second way of drawing my supply and demand or order block. Now, the third way of how I draw my supply and demand, let me still duplicate, extend to the downside, to the second side, then this one here, this is the third way of how I draw my supply and demand. Now, let's say the same scenario, the third way. Let me scroll down. The third way. This one, we draw from the body to the week in a sell market. The same thing we did, but this one in the reverse. Now let's just say you know, the color would different, because let's just say this is a sell candle, for example. If I want to mark now, I will mark from not the week to week, from the body, since this is a sell market, from the body closing down to the week. No matter how the week take day, if not like this, I go mark them. If not like this, I go, let's just assume it's like this. So the idea is to mark from the week to the body. Sorry, from the body closing to the week. So this is the third way. Now there is a fourth way of me marking, but this one is a very rare condition. Now this one is not included in the book. Let me show you. It's not included. So this one is not included. I recently started using this. It's not included. And if you want the copy of this book on how to trade, you know, supply and demand with my own strategy, check the pin message, the pin comment as well. Just go to the comment section. You will check, you will see the first pin message. I'm going to pin it, the pin comment. You will see all the links there, how to get the book or apply for the mentorship, or reach out to me directly on WhatsApp if you have any question. And again, once you get the book, the copy of the book through the link, ensure to send a direct message to me so that I will add you to the VIP group. We have a VIP for those that have, you know, the book. That is where I drop my setup, you know, if I have. So obviously you can see this is the VIP group. So if you want to join, it is for those that have the copy of the book. All right, this is where I drop my setup, or you can communicate with fellow traders. This is someone's trade, you know exactly. This is the exact thing I'm teaching you. This is someone trade, and this is the exact thing I'm teaching you. But initially, for me, if I want to take this trade now, it's going to be the extreme demand zone. Then I'm not telling you this one will not hold. This one might likely hold because it's having an inducement. The same thing I'm teaching you is what they are applying in the charts. All right. And this is a VIP group. So coming back, this is exactly how I mark the third step, the fourth step. This is exactly how I mark the fourth step. If you follow it here, I teach you, you will see success. I swear. So the first step is to mark the body closing to the body closing. You know, say the first step for this side, we mark the week to week. We mark the week to week. Now the fourth step is to mark the body closing to the body closing, and we draw it. This one is very risky, and if you try this one alone, you will miss out a lot of trade. Even using the other ones, if you miss out. But in some scenario whereby the other block is small like this, I will avoid it. I will just go with either the 2 or the 3, depending on what I'm looking at. But if the other block is like this, maybe the other block is huge and big, I can decide to mark the body to the body. This is exactly the 4 different ways of how I draw my supply and demand zone. Now, let me just quickly show you in the chart. Now, look at this. If I want to draw now, if you look at this market now, let's start from here. If you look at this market, I will draw from the body to the body. This one is too small. What I will normally do is I will draw from the body to the week. This one is the step number 2 because we are in a buy market. Have I deleted them? Okay, this is the step number 2 because we are in the buy market. Now we draw from the body closing down to the week. Then here will now be the last inducement. The market will come and sweep. This is how to draw and trade. Then you now enter the trade here. Stop loss is going to be, this is tap entry, rather aggressive entry. Then you target the upside. All right. Now after that trade, let me delete everything so you see what I'm doing. Now after that trade, what do you do? Again, the same concept. We mark, but this time around the other block is big. We mark from the body closing. Now this other block doesn't have a wick. Let me show you. Let me zoom so you see. It doesn't have a wick. We mark from the, you can choose to mark the week to week, but I would choose, especially when the other block is big, the rejection candle will be my confirmation there. Boom. Although this is indices, and same thing applies to crypto and currency markets. Then you target the upside. I have been backtesting this. I am confident in telling you, bro, it works. Let me show you where is the previous one, because if you are trading currency, it doesn't apply most of the time. I think I did something like that. Now let's look. Okay, let's look at this one. Let's look at this one here. Now let's say I want to mark. Now the other block here doesn't have a wick, so I'll just mark the body to the body. Or if the other block is small like this, I can extend it. You just choose the one that you want. Once the market tab here, you see the confirmation. Boom, that's exactly how to draw and trade order block. 1 to 3 is okay for you. 1 to 3. Now this time around, let me delete it again. Let me delete it and show you. Now we have another order block. All right. Now this order block is big, so I will just focus on the body to the body. Although there is no wick at the top, I will focus on the body to the body. Then I will extend it. Boom. Once I notice that rejection, I will enter here, stop loss like 15 pips. 20 pips is okay, 18 pips is okay. Then we target the upside. Boom, market straight to the moon. Now, same thing with BTC. Same thing with BTC. This apply them in the currency, in the crypto market, it works. Now, if you want to mark up, this is a double bottom. I'm going to be showing you guys how to know if reversal is about to occur. That is why I'm urging you to subscribe to the channel if you have not subscribed, because a lot of content, value, quality over quantity. That is what I do on this channel. Now, coming back here, this is a market structure shift rather. And again, you have to know how to identify market structure shift. All these things I'm going to be teaching you in this channel. All right. Now, how do you mark the order block? If I want to mark this order block now, it's going to be, this is a low probability order block. I'm going to be marking from the body to the body. I like using the body to the body because it gives me a tighter stop loss and a sniper entry. But you can choose, since you're on a buy market, you can choose the body closing to the wick. Then from there, once you see the trade, boom, stop loss below, you target the upside. Now, what about this scenario whereby you now have a huge order block like this? I will not just miss it, the body to the body. I don't use the wick. The body to the body, 50% of the candle. Then boom, once I notice that rejection, stop loss is going to be a few pips below this low. And I think I'm going to be making a video on how to, enter the trade, sniper entries and stuff like that. Then after that one again, let me show you another one. There is still a huge order block here. I will not hesitate. Mark the body to the body closing, then extend it 50% of the market. Once I notice rejection there, boom, then you ride it up. You see? So that's exactly how to draw and trade supply and demand, or probably order block. So what I want you to do now is to go and mark them, go to the past market, go and back test, learn how to mark them. And again, this is a pro tip. Have them in your head. Go and back test it and find out which one the market respect the most and start using them. I use these 3 the most. If you notice my setup, I use these 3 the most. If you notice all the setup I've been dropping, I use these 3. So go and back test it. Which one the market is respecting more, and which one is comfortable for you, and which one give you a sniper entry. So this is exactly, in case you want to ask me, how do you mark your stuff once? Just control Z and you drag them or you delete them. So this is how I trade my demand and supply or my order block, the same thing. And this is how I draw them. So this is how I draw my supply and demand, or this is how I draw my order block. They are the same thing. Don't get confused with the language. And this is how I trade them. This is how I draw them. 4 different ways is also inside the book. And again, this is how I trade them. So let me know your experience in the comment section. All right. So if you need a copy of the book, check the pin message, the first comment, or probably you want to join the academy, it's going to be in the comment section, the first comment. Or if you want to reach out to me directly on WhatsApp, my WhatsApp link will also be under the first comment, the pinned comment in the comment section. Or you can also check the description of this video. And again, to round it up, I'm officially telling you, I don't give signals, I don't do investment, I don't do account management. None of my social media page will reach out to you first. If they do, that's a red flag. If money is not involved, that's a double red flag. So all you want to do now is ensure that you are subscribed to this channel if you are looking for free knowledge. There's no harm in trying subscribe to the channel and check it out yourself. If you're not interested or the value are not enough for you, you can unsubscribe. But ensure you subscribe because I have a lot of content I will be posting in this channel. So let me know your experience in the comment section. Tried it and let me know your thoughts. For now, stay safe and I will see you probably on the live stream or in my next video. Stay blessed.